I know there's a bit of nuance to the method, but do you have any resources that explain how to evaluate a company's fundamentals? This market is a vibe market. Nobody cares about fundamentals. It's trying to get in before everybody else on every new thing. As far as nuance to fundamentals, I mean, value investing has changed a lot. And the thing is that I can't say it doesn't work anymore, but the old way isn't working now. It's just a different market. It's a different type. There's too many people in the market. There's too many changes in the market. There's just too much anti-capitulation happening. And until there's massive unemployment, we're not going to see really a major sell-off. As far as fundamentals, I mean, it's real simple. You go to the financials, especially on TradingView. They have a great one. If you hit exclamation point platform, for those of you guys who never use TradingView, it's a free. This is free. You can scroll down here to go to financials. You can go through it. I like to look at, Charlie Munger famously said, EPS growth year over year is probably his favorite thing, right? So look at how much earnings per share there is, and that takes into account the total float, buybacks as well, with so many companies doing buybacks, how much they're earning, how much that's going up. Adjusted EBITDA is bullshit. We all know that. My favorite indicator that nobody talks about is ROIC, return on invested capital. So if a company takes money and they're sitting like GameStop, people are like, GameStop has all this cash they're sitting on, and they bought this Bitcoin reserve, and they're making, what are they doing with their cash? Nothing. Yeah, but they've got all this money. Cool. No one gives a shit if you have money if you're not doing anything with it. Every day that goes by, that money loses value. And are you doing something to grow the company or make that company worth more in 10, 20 years? No. So if you have capital, how is your return on it? Are you investing in it, and are you getting a return on it? Whether it's internal, when it's R&D, whether it's external, whatever. ROIC, above a 5, I love. Above a 10 is like a buy for me, especially if their other fundamentals are good. But you want to see, are they reducing their debt, right? So for example, let me look at AEHR, which is not a good example, but here. Cash flow growing. Cash flow is growing, is good too, but in a inflationary environment with capital devaluation, a debasement on currency, it's not what their cash flow is, it's are they being good with their cash flow. For example, we went balls deep into RTX when they had to ground the planes because of their engines, and they said it was going to cost them a $1.5 billion to repair it. They had $9.5 billion cash. So I told everybody here, I'm like, that's nothing to them. Like, they literally, that's nothing to them. They'll be fine. But the stocks sold off 25% on this news. Like, they literally have that cash sitting around. And so we bought an ungodly amount of RTX 2 years ago when it went under 80 bucks. Right here. This was insane. This was October of 2023. It sold off like, it was like, what the fuck is going on? Like, how in God's name are people dumping RTX off of a grounding that's going to cost them $1.5 billion when they have $9 billion cash on hand? Like, sure, it's a small hit, but that's literally cash they have sitting around. And it was wild. It's wild. It's 100%. And it's on a fucking major defense stock like this. Now, as far as what we're talking about here, I'm sorry. I know I'm being too, like, informational today. But yeah, so if you go into the financials here, and AEHR is not a good example, but AEHR is a stock that we bought pre-COVID because we figured about the supply chain stuff, that the demand for chips and stuff like that, they would need to source wafers and parts more locally because of the supply chain crunch. And so we found this little company that did wafers in Canada, and we jumped into it $3.50, and it was one of the best picks we ever had before this bull run, way before this bull run. But yeah, so you can go in here and you can go into their statements right here, and you can do a quarterly or an annual basis. So on an annual basis, you can see what their total revenue is. But remember, revenue is just how much money they're making. It's not their net profit. Like, they could be spending a lot of money, right? So their revenue, has gone since, over a year, 15, 21 million, 50 million, 64, 66, a little bit of a dip right here. But then you start looking at, like, why is that? So cost of goods sold. Then you look at their gross profit. Gross profits dipped as well, right? So year over year basis, this was last year. That's why they came back, but they were on a good run. But if you look at a quarterly basis, for example, here, all right, so you've got a dip on total revenue. That's why the stock fell. There's concern about the legs, right? So you don't want to buy into something that's dropping here on the gross profit, because this is Q1 though. It's dropping back down as well. So when you look at this is why people would sell into this, because you're looking at, your revenue dipping, your profit dipping. And so you're like, okay, and I'm not saying AEHR about buy or sell. I'm just explaining this right now. Operating income falling even more. You're looking at your pre-tax income, pretty steady right there. Net income though, negative $2 million. Better than Q4. And again, I haven't looked at Q2 yet on this thing. Better here, but still not really good, especially considering in Q4 2023 they're at $23 million in income, right? Like they're losing a lot of money right now. Your EBITDA year over year growth down to negative $2.92 million. Okay, we're just bleeding out here. Bleeding out. Their EBIT growth year over year has gone from 2.5 million surplus in Q4 of 2023, 159,000, negative 1.5 million, negative 2.34 million, negative 3.85 million. You're like, there's no way in hell you're going to buy into this, right? We bought into it way back here and we made 1,000%. But as far as buying it for the long term, I'm still not. I'm just going to hold my shares that I've had, right? But nobody's buying at this level. It's part of the reason that they fell in their last earnings. Now, one of the things I like to look at on their statistics here is obviously people like PE ratios, right? So people like to look at PE ratios, which I don't know why it's not showing a PE ratio for here, which in this market, 12 isn't bad. Price to sales ratio of 13 is actually pretty low. Return on assets, you're at negative 4.9. Return on equity, but here's what I like to, return on invested capital. See how they were in that 20 to 30 range? That's when it was exploding. They're losing money on their investments right now. Okay, now some people would say that's because they're doing cash burn right now to keep up with the tariffs and they're trying to expand and everything like that. Not a good look here. Gross margin is at 33, much lower than the 50 they were at Q4 of 2023, but they're hitting pretty hard right now. And everybody looks at every number differently. I'm just giving you how I look at it. Rev per share is actually up pretty good though. I mean, that's impressive though. It's one bright spot here. You're at $1.90. Operating cash flow has gone negative. Free cash flow has gone negative, but doubled in the past 4 quarters. Yeah, this is trash. Absolute trash, in my opinion. Why am I in calls? Because I know how this market works. Nobody looks at these things anymore, right? Nobody fucking looks at these anymore. That's why I said, if you want to look at fundamentals, you can. I don't, unless it's a long-term investment. I don't trades. I don't right now because it's a vibe market. I know that's like doesn't sound responsible, but hey, I tell you not to fucking do what I do anyways. You are seeing that they've got expansion right here. You do have the big increase in Asia right now. They went from a US base to a huge Asian market, so at least you're getting, you know, some international markets here. As far as source, you can see they've completely switched their. This is why they're losing money right now, which might be a good thing in the future, right? You got to look beyond just the numbers. So here's what they were doing, right? So their wafers. The whole reason we got into them in 2021 was because of their wafers. And look at that. Bam. We made a shitload of money on that. But now look at the business shift. They're switching from wafers to now more diversified, right? They went from straight wafers to services, systems, and contractors. So they're diversifying, which may, and this explains why they're losing so much money, right? So you look past the numbers on the balance sheet and say, well, they're losing a lot of money. What happened? Well, they're doing a strategic shift in the business, and that's going to cost a lot of money. The question is that going to be something that ends up being a very big success story for them? Or is it going to be something that they fucking screw the pooch on, right? And so when you look at these types of things, you got to say some investors are like, okay, yeah, they're losing a lot of money, but it looks like it's because they're doing restructuring. They're changing the business. It costs a lot of money. But sometimes you have to spend money to make money. So again, that's why it's very important to watch what they're doing, their contracts, who they're working with. AEHR might be a winner with all the OpenAI shit right now because NVIDIA can't keep up and everybody's having to, demand for semiconductors and chips and GPUs and everything is just exploding right now. And so people are having to source everywhere they can. Company like AEHR, they're not making wafers, so there's no guarantee. But it's kind of like, you got to marry a chick, right? Do you go with the loyal girl who loves you but she's very quiet and doesn't have a lot of interest and she's just she's vanilla in bed, or do you go with the one that's got more red flags than a fucking Chinese naval blockade, okay, or a fucking Chinese military parade? All right, more red flags than that. It got that grip. And she's gonna do some things to you that you didn't think you would like, and you're scared, but you have the balls to do it. But you know that she may leave you at any moment, or you may wake up missing a kidney or stabbed when she's angry, but she'll cook for you after. I'm sorry, I'm just explaining Latina chicks, but you know what I mean? So you have to make that decision. I can fix her. Okay, we'll see.